So let's actually start there with those nat gas prices. Amidst the energy crunch in Europe and the concerns about whether there's even enough nat gas to get us through the winter in Europe, what's your market outlook there for prices?
Well, so prices are, as you pointed out, at exceptionally high levels, well over $250 a barrel of oil equivalent, which is 10 times the price we're seeing in the U.S., more than 10 times right now. So Europe has a huge issue. Europe never really built inventories throughout the past few months. So Europe went into winter with very little gas in storage. And now, because there's a structural deficit, we are starting to see prices jumping to record levels. So liquid natural gas cargoes turn around, and rather than going to China, start going into the European ports. Russia, of course, has also lowered the amount of gas that's feeding into Europe, and there is a big dispute there going on for a number of reasons, and some of them geopolitical even. And Europe finds itself in a very tough position. And I think part of it is the fact that Europe has become very reliant on intermittent energy, meaning very reliant on the wind and solar, and has been cutting down on the traditional sources of energy, including both coal and nuclear. And because there's no gas, you've had this incredible jump in prices. So we think the sector is the industrial sector is going into a recession here, particularly those sectors that are very exposed to energy prices. And meanwhile, we continue to see the benefits of that feeding into the U.S. market, of course, which, as you pointed out earlier, is recording the strongest GDP in decades.
So walk me through, Francisco, how exposed are we in U.S. markets to what's happening in Europe, and walk me through a little bit more about your outlook for the U.S.
Well, so in Europe, we think prices are going to stay high for the remainder of the year. Of course, winter prices are a lot higher than summer prices, but we could very well see $100 a barrel or $15, $17 per MMBTU summer prices for after the winter in Europe. So that's kind of the situation there. In the U.S., on the other hand, we have the U.S. shale industry responding to the higher prices, delivering growth of over 2 BCF a day in November over the previous month. So because of shale, we're getting that flexibility, that incremental output that the market needs. And then at the same time, we've had a warmer start to the winter than the Europeans have had. So those two factors, less demand because of warmer weather and more supply, have actually led to gas prices sinking in the U.S. So I don't think the U.S. is that exposed. In fact, one of our theses is that the U.S., which is now energy independent because of shale and because of the reliance on domestic sources of production, we're going to see the U.S. moving to energy dominance. And the U.S. starting to attract a lot of industries from all around the world that are heavy users of energy, including Bitcoin, which 8 months ago was pretty much mined in China. And today, of course, North America has taken the baton and it's become the world's #1 hub for Bitcoin mining.
And Francisco, I do have to let you go. But before I do, a more U.S.-specific question. Where do you see WTI going this year? The range this year has been pretty significant, from $51 a barrel to $86 within the year. Where do you see prices going next year?
So while we are bearish on gas in the U.S., we think it's going to be $3.45 per MMBTU. We are actually quite constructive on oil. And if the Omicron data continues to show a fast and furious, to call it somehow, virus that is slapping big cities and then coming back down, as we've seen in South Africa, we could see a very good recovery in energy prices next year. Because remember, we've all been locked down for way too long, and people want to travel, want to go internationally. So we do see a big recovery. We think prices will average $85 a barrel on Brent, $82 a barrel on WTI, from average levels around $68 and $71 a barrel this year. So we are bullish on oil. We think prices will recover. The one caveat is what happens in China, because, of course, China is exposed to COVID and Omicron more than other countries around the world because of their limited natural exposure to COVID.
Shepard Smith here. Thanks for watching CNBC on YouTube.